Hello everyone. Today I am going to provide you with an overview of MCX Crude oil for the coming week, period 5th of September to 9th of September. And prior to that, we will take an view of how market has reacted last week. What was the view which we have shared as on 29th of September 22. So previous week, crude oil was trading at around 7414 levels, and we have mentioned the bias is buy on dip and sell on rise. As per the weekly charts, which is shown here, we have seen that prior to that, on a weekly time frame, crude oil has formed a kind of doji, but the bias was still negative because of this red candle, which was a kind of bearish engulfing candle on the weekly charts. So we have mentioned that unless and until crude oil manages to sustain above 8,000 mark, it is expected to encounter selling pressure on pullback, and on the lower end, it can attempt towards the immediate major support of around 6,500 levels in days to come. So the same outlook we have given on the write-up, where we have mentioned that the range for the week will be around 6,507 and 8,000 mark with buy on dip and sell on rise outlook. Overall, positionally, the counter downside remains capped and the dip towards 6,500 and lower levels can witness pullback. How things have panned out last week? Last week, we have seen that crude oil initially opened with a positive note, as we can see here on this weekly chart. It made a high of around 7,770 levels before slipping down to the lows of 6905, and finally it ended last week forming a kind of bearish engulfing on the weekly charts. It ended at 6967 levels, down 6%. So as we can see here on this chart, it has formed a kind of two big negative candles on the weekly charts, indicating that 8,000 is still going to be a stiff and strong resistance with this counter to surpass. So any kind of pullback towards 7,500 and 8,000 mark selling, and on the lower end gradually this counter can attempt towards the lows of 6,500 and 6,000 levels on the lower end in days to come. So the bias is ranged down for the coming week for crude oil, and we will be expecting that any pullback towards 7,500 mark and 8,000 levels can be looked for. Negative strategies in this counter, expecting a move towards 6,500 to 6,000 major support. In respect with the strategies which we have shared, the last positional strategy was shared as on 24th of August, when we have recommended that crude oil can witness some kind of pullback from lower levels. So thus we have given a strategy of 3 legs where we have got long on 7,200 call of 15th of September expiry, and we have sold 800 calls and 8,200 calls each. The reason was that the bias was slightly ranged to positive at that point of time and upside was capped. So initially, after initiating this strategy as on 24th of September, we have seen that the counter has made high of around 7,700 mark. So this strategy was initially in green, giving a returns of even 20,000 per lot. But last week, since it has once again slipped down and ended the week down 6%, the strategy has ended in red, down 9,100 rupees per lot. As per the payoff, the strategy will give the maximum return only over and above 1,700 mark. So if the weekly closing of 15th of September is over and above 7,800 mark, it can fetch the maximum result returns of 57,000 per lot. On the flip side, the break even is at around 7,500 mark, till when the strategy will be in a green. But at the same time, the maximum loss this strategy can incur is 22,400 if the closing is 7,200 levels. Thank you viewers for your precious time. If you find our content, kindly get in touch with us for the future reports and strategies in crude oil. Thank you very much.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.